is run by a bunch of investment bankers, and their modus operandi.
I'm Javier Sáenz de Cenzano, Director of Fund Analysis for Morningstar in Spain. Today we are going to be talking about emerging markets and Asia in particular. It's been a hot topic over the last decade. Morningstar has positive analyst ratings on some of the Aberdeen emerging markets funds, including Asia and global equity products. We have here today with us the head of Asia Pacific Strategy and Asset Allocation. He has 24 years of experience and is based in Singapore. Peter Elston, thanks for coming.
Thank you for having us.
First question I would have is in terms of generally in Asia, do you think it's an attractive investment opportunity at the moment? Do you think it's undervalued relative to other developing or developed worlds?
Well, I suppose the first thing to say about Asia is that it will continue to be a very high growth region. Asia has been the highest growth region for the last 40 years. We've had growth in the developed world of maybe 2 or 3%. You've had growth in Latin America, Eastern Europe of 4% or 5%. In Asia, we've had growth of 6 or 7%. So it's been the highest growth region in the world. It will continue to be the highest growth region in the world. There are countries that still are quite a long way behind in terms of their sort of evolution. You have countries like India, which have grown quite a lot in the last 20 years, but still GDP per capita is still very low. So there's still huge growth potential for India. Demographics are still very positive in a number of these countries. So the fundamentals for Asia are still extremely positive. Now, having said all that, it's very important to have a very bottom-up approach to investing in, well, certainly emerging markets generally, but Asia as well as part of that emerging market universe. And the reason for that is that because there's so much growth in Asia, there are lots of companies that they want to invest in everything. And of course, that can get companies into a lot of trouble because they expand their balance sheets, they take on too much debt, they go into new areas of business, and they end up getting into financial difficulty. So you have to be very careful about which companies that you invest in. And having a very bottom-up approach, having an approach which focuses on good quality companies that maintain very strong balance sheets. I think companies that have a very focused business, fairly simple businesses, these are the companies that you should, as an investor, want to be buying for the longer term.
And going a step back, you run a multi-asset product that can invest in equities or fixed income. In which asset class do you think there are the best opportunities at the moment in Asia?
Well, the Asian multi-asset fund that I manage is a very simple fund. It invests in equities, bonds and cash. Right now we are very close to our benchmark weightings, which is 40% equities, 60% fixed income. We're slightly underweight equities because we think that there are issues relating to earnings growth in Asia. There are issues relating to the impact of what developed countries' central banks are doing at the moment and how that is affecting markets in Asia. So we do think that there are going to be opportunities to increase allocations to equities when markets are at lower levels. So right now we're very slightly underweight equities and slightly overweight fixed income, but it's not a huge deviation from the benchmark.
And what about currencies? You offer your fund in euro hedged version, non-euro hedged version.
Yes.
So for a euro-based investor, would you recommend to get currency exposure at this point, and which currencies in Asia would you favor?
Well, I suppose there's a couple of ways to look at that question. The first question is with respect to the whether or not the share class is hedged, and then at another level, which is the currency exposure within the fund itself. Now, certainly in terms of the domicile of the investor, I think there are always good reasons for at least hedging your fixed income exposure, because there your cash flows are, you know when the cash flows are coming, and you know the denomination of the currency of the cash flows. So hedging for fixed income, I think, makes a lot of sense. Okay. When it comes to equities, it's a more complicated question, because what do you hedge? Are you hedging the denomination of the shares? Are you hedging the denomination of the revenues? Are you hedging the denomination of the profits? It's a much more complicated question. The second issue relates to the currency exposure of the underlying investments. Now, on a longer term basis, we would be very optimistic about Asian currencies. Okay. Why? For the same reasons that I mentioned earlier, which is that Asia is going to be growing faster than other parts of the world. And very simply, if your economy is growing faster, then your currency is going to be appreciating more quickly. So on the longer term basis, very comfortable having exposure to Asian currencies. In the short term, it's a more difficult question. We've seen this year a number of Asian currencies perform very poorly. Not just Asian currencies, but emerging market currencies. Within Asia, we've seen the Indian rupee decline very sharply. We've seen the Indonesian rupiah decline very sharply. To some extent, that depreciation is related to these countries having large current account deficits, and a current account deficit always means that your currency is probably overvalued. But also these declines in currencies are related to what central banks in the West are doing. When central banks threaten to tighten monetary policy, that has serious implications for what Asian currencies or emerging market currencies are doing. And I think that too is likely to continue to have some sort of impact. So short term, it's a more uncertain picture, but the long term outlook for Asian currencies is still a very positive one.
Great. It's a very nice overview of the whole Asian market. Thanks a lot for coming, Peter.
Thank you for having us.
And thank you all for watching. You can follow us on our Twitter and Facebook accounts.
Is run by investment bankers, and their modus operandi